Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday the 20th November 2022 and this week we are going to talk about whatever the audience want to talk about. Standard format, we hold these sessions every Sunday evening 7 p.m. till 8 p.m. UK time. We have these sessions for novices, for experts, anyone in between. The whole idea is for people to come along, to learn, to share, and to discover new things about this crazy world of crypto. We talk about cryptocurrencies, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms really. Or if you want to talk about specific things around crypto wallets, private keys, public keys, addresses, that kind of thing, we sometimes cover that as well. Really depends upon what the audience is and what they want to talk about. We do meet, as I say, every Sunday evening. There's a link to join below. Come and join us for a future session. Anyway, let's see who's going to come and join us today. Hey, Elena.
Hello.
We've got Harry on as well, who seems to be having some problems. He's connected, but I can't hear him. So he may come back again. So we'll see. I'm not sure how many people come along today. It's been another crazy week in crypto with FTX, the bankruptcy, the Chapter 11 filing, and I think there are more things happening in the crypto world at the moment that we'll find out about next week. So we shall see.
That happened around the FTX or something completely separate?
I think it'll all be linked because what I'm seeing is kind of a domino effect. So about a month ago, I think it was now, with Three Arrows Capital, and some of the things that were going on with some of the activities around Three Arrows, and I've forgotten the capital provider now, but there's some problems. I think that's what led to the liquidity problems with FTX. And now the problems with FTX, I think, are going to lead to other things going on as well. So I've heard of at least one other organization that has some challenges, shall we say, at the moment, and might be making an announcement next week. We'll see. As Harish puts in the chat, FTX is taking down many others of some of the small exchanges. I've not actually seen any of the other small exchanges failing yet, but we may well see some liquidity problems that causes them problems. So who knows? It's another crazy world. It keeps coming back, as I keep saying on various other channels at the moment, not your keys, not your crypto. This whole idea of if you've got a crypto wallet and it's connected to an exchange, if you use a user ID and password to access that, which means that you don't have the private keys, then there is always the risk that that means that if the exchange fails, you lose access to your crypto. So just something to watch out for.
Yeah, I suspect the sales of cold wallets soared last week. Do you think?
Yep, yeah. I think you're absolutely right. So Nano and Trezor, which are the two favorite hardware wallets, definitely there's been lots of people talking about those. And then also, even with software wallets, which are better than nothing, there's a wallet called Trust Wallet, and Trust Wallet has a token associated with it, which I never like anything that has a token because that can cause problems. But Trust Wallet, the token price went up like a rocket for a while and then dropped back down again. So I agree that that there's definitely more things happening, and definitely having a hardware wallet's good. But again, some of the conversations I've been in with people either on LinkedIn or Instagram this week about having a hard wallet, that actually that isn't the most important thing to secure, which people think. No, so people go out, they'll buy a hard wallet like this thing, they'll store the crypto keys on it, but what they don't realize is that it's actually the seed phrase, or the seed
that's most important,
which is most important. So the way I kind of describe it, let's see if I can figure this out. The seed phrase is the basis upon which all of the other wallets are built on. So if you get let's say this was a Nano Ledger, for example, and you're asked to create a unique value. So just pluck a number 38 digits long from somewhere in the universe type thing. That is the seed phrase. And then through a process which is called BIP 39 usually, so that's the Bitcoin Improvement Proposal 39, is what's called a seed phrase. So this is a 12 or 24 word set of words which link with that magic number that you've created, which is just a totally random number. From that, your private keys can be created, and as part of the private keys, you then have public keys. So this is where you've got kind of 4 different things. You've got seed phrase, which allows you to create a private key that allows you to associate a public key, and then the public key is encrypted such that it gives you what is called a wallet address. So you've got these 4 things. You've got seed phrase, private key, public key, wallet address. So when people are sending money around, when they're sending crypto around, there should be correct on that, it goes to the wallet address. You can reverse engineer the wallet address to give you the public key. It's just an encrypted version, but you can't decrypt it to do the private key. The problem is everyone thinks that the private key, which is on the wallet and so on, is the important thing. But if you've got that original seed phrase, that imaginary 38-digit number, you can use that to recreate the private keys and the public keys. So, you can go and stick one of these things in a safe somewhere, and it's got the seed phrase, and it's got the private keys, and it's got the public keys and all that. But if you've written out that seed phrase somewhere, or you've written in a Google document or anything like that, then that's actually the most insecure thing going. So it's interesting. Harish is asking the question, do wallets like MetaMask and Trust Wallet give you seed phrase and private keys? So I think they do. I've not used either of them, but usually the way that a self-custodial wallet, so that's a wallet where you've got the private keys, that will normally have a seed phrase that you create. And the reason for this is, first of all, it gives you that random position from which everything else is created. But also, if you lose the wallet, or you lose your computer, or you lose anything else, as long as you've got that seed phrase, you can use that to recreate the original code from which your private key and public key can be created. So interesting, Harish is saying his MetaMask wallet was hacked. What may have happened is, because this is browser based, so MetaMask, usually you'll run it through Brave or Chrome or whatever. There is sometimes the ability to intercept anything that you've typed in your keyboard. And so things like seed phrases and private keys can be hacked in there. So you have to be just very, very careful. So Harish is saying one of his friends got hacked 3 or 4 times. So a very unlucky friend. Definitely. So the key message from this is to always secure your private keys, but always secure your seed phrase as well, because that's actually the most important thing. So another way of thinking of it almost is, if you imagine an old-fashioned physical wallet, the sort that men used to put money in and credit cards and that kind of thing. A seed phrase gives you access to that wallet, so the wrapper, and then within that wallet are your credit cards, and you need a PIN number to access anything off any of those credit cards. So think of the PIN number as being the private key. The public key is the bank account number that's associated with, and the password that gives you access to that physical wallet is your seed phrase. So if you were to throw the wallet away, as long as you've got that seed phrase, you can go off and create another wallet and create the private keys and the public keys from it. So yeah, so as he says, the old traditional leather wallets were safer in some ways. So yeah, think of it almost like one of those traditional leather wallets, but it had a little combination lock on it. Well, that combination lock is almost like seed phrase. So it's all very, very complicated, but once you draw it out or write it out, you begin to understand it type thing. So, but yeah, because it's complicated, that means people often are lazy. So they'll do things like they'll type out seed phrase in a Word document and they'll store it on their computer and they'll call it secret seed phrase, do not tell anybody type doc. Or even worse, they do things like, I know people who've created it as a draft message in their email and they've not actually sent it, and they go, oh, well, it's perfectly safe if I've not sent it. It's not going across the internet. But if your computer has been hacked, one of the things a hacker, if they're a crypto hacker, will do is they'll look in your drafts folder for any messages that have got 12 or 24 words just in them and go, oh, it's probably a seed phrase.
So due diligence and common sense, basically.
I always think it's unfair describing it as common sense, because common sense is based on your knowledge. And if you don't know about these things, it's a little bit unfair. I hate the phrase common sense anyway, because I don't think it's that common and I don't think it's very sensible. Common sense is based on experience of yourself and of others that you know. So as an example, a really, really simple example, if you were from a tribes people type thing where you'd lived in the jungle and you'd never met any other human beings or whatever, then what is common sense to you will not be common sense to someone who's lived in a city for many years. Simply through nature, it's not common type thing. So common sense in crypto only works if you learned about these things and you're aware of them. So I had a conversation with someone the other day about private keys and seed phrases, and they were insistent that seed phrases and private keys are the same thing. And this is someone who's meant to teach people about blockchain and crypto and say, no, they are different. And they said, oh yeah, but we use the term interchangeably. It's like, well, maybe you do, but you're using it wrongly. So this is, again, it's something about this whole common sense type thing that doesn't always work. So I'm not a fan of believing in common sense. So,
Okay.
hey, Michael, hello.
Hi, that was interesting soundbite to land.
Which was that, common sense?
Yeah.
Give you the explanation. It was just that we were talking about looking after your keys and your seed phrases. And Alina was saying, it's kind of common sense in education, but I was arguing that common sense only works if you know about this stuff. So it's a little bit unfair. So what brings you along today, Michael?
Well, I've been going to a lot of Web 3.0 and crypto events recently. I've been fortunate enough to have a career break where I'm retraining. I've got a few clients for a small digital media marketing agency I launched. I might be going back into a 9-to-5 in IT for a stable income to support expanding that, but I'm not too sure where it's going yet.
Okay.
Backup plan to teach English as a foreign language too. But apart from that, I made some money off ApeCoin and all the hype of it last year. And crypto has been around for a long time. Being in IT, I was interested, what is blockchain, started learning about it, going to these events. And after meeting some people at these events, I joined a WhatsApp group and your links was on that. I came to this event and I'm looking to be investing in crypto once I have some investment money saved up. So
Okay.
just here to learn, really.
Excellent. Well, you're probably not dissimilar to many other people who sometimes come on. I was curious, you were mentioning that you may go into English as a foreign language teaching. I think, Alina, do you teach English as a foreign language?
I did, yeah.
Yeah. I thought there was some connection there. Yeah, it's interesting. But yeah, Michael, so have you only recently come into this arena then, this area of interest?
I'd say so. Like I said, I made some money off cryptocurrencies because I got into a bit of trading like a lot of people did last year during the lockdown. I didn't make a huge amount of money, but I saw the potential. I was living with a flatmate at the time who invested in crypto. He's been doing it for quite some time. He was in a senior IT position to me at a different company, and he explained the technology to me. We had some conversations about it. I thought it was incredibly interesting. But now I'm seeing, the potential with good consumer engagement and how big with the metaverse and the games that have NFT avatars which players can trade with each other and they have their own economy. I can see the potential for it being like huge once it reaches the public on a large enough scale. So even despite the recent crash and all of that, I still think it's definitely got a place in the future and it's going to be a large one. It's just that it hasn't really been figured out exactly what that's going to look like yet.
Yeah, I think you're right, and you'll find probably other people who come on these calls will agree that it still feels like we're at the beginning of the journey in some ways. It's still early days. You look at the market capitalization of cryptocurrency, it's currently, I think, $800 billion. It did reach about $3 trillion, which sounds like a massive number, but in terms of traditional financial services, it's tiny. It really is. And then you start looking beyond just cryptocurrency. You start looking at, as you say, like NFTs or tokenization of any digital asset, really. So tokenization of real estate, tokenization of art, games. Then you start blending into, as you say, the metaverse, which is the current hype word that's being used all over the place. And you can see certainly, and this is not financial, legal, taxation advice, as I'll often say, but you can certainly see that this entire market will grow 10, if not 100 times larger than what it is at the moment. I think we are just tipping our toes in the water. And my passion is the blockchain layer, which is the technology that sits underneath it all. And so cryptocurrency is just one of the many things, of how blockchain's being used. So traceability of goods, products, raw materials, digital identity, smart contracts, all this kind of stuff. I find it amazing. And Harish was just saying, how long have you been into cryptos? I started getting interested in blockchain around about 2014, I think it was. And I started going to a couple of events in London, listening to various talks on blockchain. And I have to admit, most of the time I did not understand anything that was being talked about, but I realized it was still something that sounded like it was going to be something big. So I started learning about it. I started reading about it, read a few blogs now. Eventually I realized that most of the people who were on stage were either talking at a too detailed technical level, so they were going down to like the coding level, which was not for me, or they didn't understand it themselves and they just read an article and they were trying to explain it and they weren't doing it very well. So I got more and more into it. And then at the beginning of 2016, I became an independent consultant. And I've been doing blockchain education consultancy and advisory services for 6 coming on 7 years now. So I work with individuals sometimes, but usually businesses, a lot of time in financial services, law firms, banks, insurance companies, and that, helping them to understand this technology and what it's all about, and importantly, what it's not, and where a lot of it's just a load of smoke mirrors and marketing campaigns type thing. I didn't really mention crypto there because I got into the blockchain side of things, and I intentionally avoided cryptocurrencies because I thought, oh, yeah, it's all hype, it's all fluff, it's all about the money going up and down and that kind of thing. It wasn't really what I was into. And then in 2017, kind of inevitably ended up just dipping my toe in the water and finding out what a wallet was about and how you register on an exchange and that. And then once you got into that, there's no escape. You start, oh, no, I've bought some, some Bitcoin or whatever. I'll try some Ethereum now. And oh, well, that means I need to do this. And what's an ERC20 token? And there's so much and so much more to learn. So plenty of things. So yeah, 2017, 2018, you're right, was the boom of the ICOs. And in fact, I describe blockchain. You may have heard of it. There's a technology company called Gartner who do what's called a Gartner hype cycle. And what they say is technology comes in like a wave, that you've got this initial innovation trigger. Everyone gets really excited and interested. You've got what they call a peak of inflated expectations, where there's loads of marketing going on. And then as they try and implement stuff, it drops down to what they call the trough of disillusionment. And then eventually it kind of improves. And I think they call it the plateau of reality or something, where it kind of stuff kind of happens. What I think happens actually with blockchain is it's gone through this initial wave, but then it's then created other waves. So you've had the ICO wave in 2017, 2018. That was followed by what was called the STO wave, so security tokens. Then you had DeFi, which came through. You had NFTs, which are still coming through, and NFTs are going through several waves. Now you've got the metaverse wave. So yeah, I think there are constant waves. And the way I kind of describe it overall, it's a little bit like the California gold rush, where everyone's piling in thinking there's gold all over the place and there's lots of exciting money to be made. And then it fails, and then there's another gold rush, and it fails, and there's another gold rush. But what it leaves behind is the railroad tracks and the hospitals and the schools, which then allows people to then build on. So I think each of these waves that we go through moves the technology forwards a little bit. So hopefully into a more interesting place. So that's my kind of history, really. And it's curious, Harris, you're saying NFT is very confusing. I really don't understand whether it's got a good future. So an NFT, so a non-fungible token, I'm not going to go into the technical side. All an NFT is it's a digital receipt to prove ownership of something. So all it is, it's like having a digital receipt to say I've bought something from McDonald's or whatever. But it's the fact that that digital receipt is held on a blockchain, which is immutable, so it can't be changed. It's managed by a smart contract, so it can't be changed. So it provides evidence of ownership. Now, Harris is saying, well, it's not backed up by something really tangible. That's very true, it's not. It doesn't need to be. So you look at one of the hypes NFTs went through recently was around the art world, particularly in digital art. If you get involved in art in any way, so traditional art galleries, this kind of thing, what you realize is that most art investors aren't actually bothered about the work of art. You know, usually it's actually stored somewhere in a either in a gallery on display, or more likely it's actually stored away in a secure vault, which is air conditioned and they can't visit in there. And most art collectors collect art simply so they can say that they own it. And that's it, it's bragging rights, it's nothing more than that. And that sounds kind of weird because they're buying pieces of art for millions of dollars simply to say they own it. And then they keep it and then they sell it for even more money. So you're right, that there's a lot of stuff that's not backed up by anything tangible. NFTs are no different from the existing world. There is a lot of hype, yeah, as Harry says, that's very true. And it's often hype that drives these things. So the craziness, I mean, Michael, you were saying about how you made some money out of ApeCoin, which links in with the Bored Ape Yacht Clubs and the NFTs and everything. Yeah, so all absolute hype. I don't know, what's your thinking on it? Why did you get into it, Michael?
I think touching upon what you said, which was an excellent explanation, because I have, you know, a hobby kind of interest in history and like human behavior myself, is that when you think about it, like, why is gold worth anything? It's shiny metal we decided has value like thousands of years ago. So like really, like the value of money is how many people agree it has value.
Yep.
Even if it's something tangible or digital or whatever it is, it's us as a society that decides its value in a way.
Yeah, I completely agree. And this is where people try to rationalize other people's behavior, and you can't. You eventually realize that a lot of people's behavior, particularly when it involves buying things or getting interested in things, has got nothing to do with rational behavior whatsoever. I often use the example, there's a group of people I know who I cannot understand why on earth they do what they do. Well, and what they are, a group of grown men. You know, they're all in the 40s, 50s, whatever. So you'd expect they'd have, as Elena says, a lot of common sense. But these guys, each week they get together and they spend hundreds of pounds traveling around the country to watch another group of men kicking a ball. I don't get that. I really don't understand it. And they'll spend, and they don't even get to kick the ball themselves. And they've just spent. Yeah, that's right. Yeah, what's the point of that? If you're going to pay £100, you at least want to have a go at kicking the ball yourself, so you've got the experience of. So to me, I don't understand that. Which is probably why I'm originally from Liverpool, which is probably the home of football, and it's probably why I don't live there anymore, because I'm just not into it. But you look at it from a rational point of view, there's no rational behind that. If you want to watch football, go and watch it on TV. You don't have to travel, and it's the same experience. In fact, you probably get a better view watching it on TV than you do traveling miles, type thing. So, human behavior is often not rational. It's all to do with emotions. So with football, it's the emotion about, it's a form of tribalism, it's belonging, it's the enthusiasm, it's the sport, it's whatever type thing. Whereas if you want to watch some really good football, go to a local football match nearby, not a Premier League or wherever they are type thing. So NFTs, definitely hyped, and it's definitely irrational behavior, but that doesn't stop it from happening anyway. And this is the whole thing that I realized a long time ago. All because you don't understand why other people are doing something doesn't mean it won't happen. It's a bit like any other thing, really, that if you don't understand it, that doesn't mean that people aren't going to like doing it anyway. So that's my thinking.
Maybe it was the same with the cryptos in the early days,
Yeah.
Like Bitcoin, hardly any people understood in the very early days, and likewise. But I mean, at least to me, the cryptos is future of money, because it is here to stay. The key factors, according to me, on cryptos is that it must have a mass adoption, it must have an end use. These are the two key factors. And the third key factor is, the project which the founders come out with, that has to be executed as per the original plan or scaled up as they go along. Most of the cryptos which came through ICOs were short-term, making a quick buck. They were not really backed by real projects, just to get a few $1 million, make quick money and then vanish, Yeah. But I think now I was just checking, there are about 25,700 cryptos, and out of that, maybe I would say, not even the top 100 would be genuine, only few handful would be genuine.
Yeah. So I'd go further than your suggestion that there needs to be two things for a crypto to succeed. I'd say there only needs to be one, which is for there to be sufficient people who believe in it sufficiently. And I caveated that with sufficiently twice. So it only needs enough people in order to, have an ecosystem in some way. And they don't even have to believe in it 100%. They just have to believe in it enough. So, Michael was talking about gold before. The reason gold has value is because there are enough people who believe it has value. So it has value. I had this conversation with someone who was ex-Bank of England a while ago about fiat currency, so traditional money in there, and what gives that its value. It's only that it's backed by governments that people have got sufficient belief is sufficiently stable, because no government is 100% stable, and nobody believes in a government 100% usually. So again, it's sufficiently. So it's a good point. But Harish, whereabouts are you based?
I'm based in Dubai.
Okay.
And, it's been crazy. Like last 3 months, almost every day, we have had an event going on blockchain and cryptos, Web3, metaverse and whatnot. Dubai is very fast to adopt new technologies. They want to be the first in anything that comes up new, you know. And they have opened up now by announcing that they are going to issue licenses for crypto exchanges, for trading in cryptos, for metaverse. So a lot of new companies are getting attracted to this region, you know, opening up offices, you know, with long-term projects. So, you know, the thing is that I think crypto, with all its negativity, is now, you know, being taken seriously, although I think still maybe 95, maybe 98% of the people are still skeptical about it, you know. And especially with what has happened recently, the first one big incident that I was aware of was, you know, Terra Luna, which from $125 went up to, I think, few less than 1 cent, you know. And now the same thing has happened with FTX. Now these kind of problems or these kind of incidents, you know, they scare the common man already, who is already scared from before with the word crypto, you know. And also it shows that, you know, there are still a lot of people who are not serious about building a long-term business, you know. Crypto offers a huge opportunity if you have a genuine product. I mean, the biggest example I can give is Binance, you know. They came up with an ICO at 10 cents in 2017. Unfortunately, I missed it. I couldn't get it. They were oversubscribed, you know. So, I mean, there are still people who talk negative about Binance, you know. Just a few days back, there was an event in Abu Dhabi. And one of the reporters from US, he really, you know, very badly criticized Binance, you know. Calling them, you know, scam and whatnot. So these things will happen, but you know, the thing.
So what wasn't that Neural Rubini who did that?
Yes.
Yeah.
I don't know if you saw the video.
I did. So yeah. For those who are watching or those who are listening afterwards, Neural Rubini is an economist. He's not a crypto person, but he correctly predicted, I think it was the 2008 crash. So he's built up a reputation as being someone of a futurologist in terms of the world of finance. And he's always called crypto Ponzi schemes, particularly altcoins, which he calls more of. But he spends a lot of his time now going to conferences, being paid loads of money to criticize crypto. So I think the event organizers bring him along just so he can be confrontational. And some of the stuff I actually agree with him on. And some of it where he talks about, as I think Michael was saying, or Harish was saying about, you get projects that have got no real firm foundation or no real purpose, definitely dubious. But yeah, Neural Rubini is always worth watching because he's just completely scathing of anything crypto. It's like, oh, it's all a Ponzi scheme. It's all fake and that. And when you ask him how it's different to traditional currencies backed by governments, he kind of struggles a little bit. But Harish, it's interesting with you being from Dubai as well, because as you say, that is a region or a country that's making great strides in terms of regulation as well. And you look at things like, is it Dubai Ports, where they've now got their own intercompany settlement scheme operating within the free ports, I think it is. And they've got the 10X project as well about how they want to be 10 years ahead of everywhere else, which...
see, Dubai, you know, is highly dependent on trade and tourism, not the UAE. UAE, Abu Dhabi is a oil cash-rich country, but Dubai has not had a great income from the oil. You know, they don't have much oil. So since almost about 20 years back, they diversified into trade and tourism, and they've become a re-export hub for the Middle East and African region. You know, a lot of traders operate here. They hardly focus on the local market sales. Most of their stuff they get into Dubai are re-exported, you know. So now the crypto game, you know, especially, you know, Dubai sees that blockchain is the future. Directly, indirectly, cryptos is related with blockchain, you know. So they were also skeptical with cryptos in the beginning. In fact, 1 or 2 events got cancelled because the organizers were just using the word crypto in Dubai about I think 1.5 years back, but now their mindset is changing. But coming back to Rubini, see, I personally see it as a great conflict between the centralized and the decentralized system. While cryptos have given a taste of freedom to the common man, to know that there is a way where you can control your own money and do with it whatever you want, pay to somebody without any middleman. So that system has caught attention from the common man, And I have been reading reports that the banks are scared of the cryptos because the cryptos are biting into their business in a huge way. And going forward, either they adopt. In fact, there are 1 or 2 local banks in Dubai who have tied up with leading international exchanges to offer services in the crypto industry. So it is always a case of those who have a habit of controlling the masses, controlling them or having monopolized the systems, they will not give in easily, because they will lose control, they will lose their income. So they are trying to fight back, by making all kind of stories. Some of them may be true because there are scamsters in all industries. To go back and give you an example, Lehman Brothers didn't have anything to do with cryptos, but that was the biggest failure in the traditional finance world.
Yep.
$600 billion wiped out, by Lehman Brothers. So, it's not that the scams don't exist in the banking system. In fact, in India, we have a lot of companies having huge NPAs, non-performing assets, and the banks have to write off. And, who loses money? The common man. So I think we are at a very critical stage of transformation on the financial system. I personally feel that we are overdue for a disruption in the financial systems, which have been very old and obsolete. Having said that, I also believe that there has to be some kind of a regulation to protect the interest of the common man, who many a times just goes by hearsay, So we have to wait and watch and see how things unfold,
I describe it in some ways because I keep arguing that we need appropriate regulation, because you don't want too much, but you want sufficient to protect things. The analogy I use is that of the aeroplane, and how it is in some ways crypto and blockchain is around about 1903 with the Wright brothers. And I'm sure Aline has heard this one before now. So we're still doing those early hops at the moment, and we're still growing and developing. And then what will happen one day is that it will do this little hop and it will crash and the pilot will die and the police will come along and the investigators and the government, and they'll say, oh, well, you can't do what you do in the way you do it. We need to put regulations in how you build and design airplanes. So then the aircraft manufacturer goes away, looks at this, and then builds their next airplane. And maybe they decide it'll fly better with 3 wings or 3 engines or something, and it takes off and it flies okay. And then they go, oh, well, let's try it with 5 engines, and it takes off and it crashes, and there's more death, more tragedy, more lawyers coming in, more regulation. So you get this kind of incremental thing of pushing the boundaries, having an accident where there's litigation and lawyers getting involved, more regulation comes in place, and then more innovation, that kind of thing. That's just the nature of technology that we get this.
No, I think that, when you talk about regulations, there's a very thin line that you need to be careful that when you talk about regulations, you are not talking about the centralized system. It has to be a decentralized system with regulations which suit the decentralized system. Otherwise, we are back to square one. Why are we talking about decentralization if you are going to have all those controls which already exist?
And that's where you then have the problem of And this is the argument about regulating decentralized exchanges and centralized exchanges. But the problem with anything that is decentralized is it's non-jurisdictional in nature. It's nowhere specific. So it doesn't need to apply to the particular laws of a particular country. And this is where it's interesting. The United States tends to do a land grab, that it will always claim that anything that's happening anywhere in the world fits within its jurisdiction, even though it doesn't. And so you're right, we need regulation that fits with decentralized world. The problem is we don't currently, there's only one form of law that I'm aware of that operates globally and is recognized globally, and that is arbitration. So different courts have got their own laws, they've got their own rules, but all of them accept binding arbitration from the International Court of Arbitration. And that's the only one that crosses that boundaries. And maybe we need something like that for decentralized stuff.
No, the problem is the common man's reach is very, very limited.
Mm.
You know, like sitting in one country and international arbitration is unthinkable for the common man.
Yeah.
For one, you know, just talking to a lawyer will cost him a couple of $100, if not more. So the thing is that now going by the case of FTX, fiasco. Now, I don't know, because I've not seen the numbers of how many people lost their money. They just keep talking about the figures, but I hope that they had more exposure to the exchanges. But again, in those smaller exchanges, it is again the people's money.
Mm-hmm.
It's a common man's money. So the problem is that it is always more comfortable for the common man that if I'm sitting in Dubai and any crypto that I want to invest in or trade in, if it has a jurisdiction in Dubai, for me it is reachable.
Mm-hmm.
Otherwise, it is impossible for the common man to go into a different jurisdiction to fight for his money. So there are still a lot of gray areas. It is still a long way to go, I think, before we really settle down. And recently, for the last couple of years, I have invested in a security token, which is actually backed by tangible assets. It's like a digital share of a private company which has not been listed.
Mm-hmm.
Eventually it will get listed. So I personally feel that any security token is better than an altcoin, especially if it is backed by tangible projects, tangible businesses which are running, making money, or in future will make money, so you will get your dividends. So we are still at the early stage in the crypto industry, I think.
I agree. But it's interesting you mentioned about FTX and how many people that affects. So I believe as part of the Chapter 11 filing, whether they filed for bankruptcy, and they will be issuing a list of claimants. And it's believed that list of claimants may be more than 1 million people. So that gives you an idea of the scale of it. But then that also then links in with, as you're saying about jurisdiction, you're saying about if it was in Dubai, it'd be reachable and accessible in that. So they filed for bankruptcy in the US. So they're claiming that it's a US jurisdiction, but it's the Bahamian government who've actually got the oversight of it, because FTX was operating out of the Bahamas. So straight away, you've got a conflict of something of, well, is it subject to Bahamian law or US law? And the problem with US law is you then have the additional complication of, well, is it US federal law and does it fall within the SEC, or is it treated as the commodities stuff, so it's CFTC, or is it wherever the US entity is incorporated, which is probably Wyoming or Delaware, so it will depend upon that. So that even in this physical world, there's a whole load of issues around geography and jurisdiction. But you're right, it all needs to be worked through, definitely.
No, but FTX was not registered in US?
There was a separate entity that was registered in the US. So what they've claimed is that all of it effectively operates through the US. So they filed a Chapter 11 US bankruptcy in the US.
No, as far as I know, although I don't have much knowledge about it, but any company who wants to file a Chapter 11 must be registered in US, no jurisdiction.
Yep. Yep.
So are they registered in Bahamas or US?
Both.
Both.
So if you look at the company structure, and this is the interesting thing, the person who's been appointed as I think he's called a chief recovery officer. So he's kind of like a CEO, but his purpose is to bring together and work out where the assets and liabilities are. He actually dealt with the Enron collapse many years ago. So it's interesting, you're talking about Lehman Brothers. Enron was a classic case of a fraud on a massive scale many years ago. So
in India, a lot of people lost money in Enron.
Yeah. So he was involved in figuring out the whole Enron corporate structure and everything like that years ago. And he's written a 34-page summary so far of FTX, which says, you know, Enron was bad enough, but the scale of corporate absence of governance and control is unprecedented. But he's drawn out an organization chart of I think it's 134 companies that are involved. And he's split it out across FTX, Alameda, who are effectively their investment arm, the website operation, and something else. And they've got organizations all around the world, except for the UK. They haven't got any incorporated in the UK. They've got some in Germany.
But are these exchanges not audited? Don't they submit their final accounts every year?
So this is part of the problem, that the auditors who were involved don't exactly seem to have a great reputation. They've not
hand in glove.
Yeah, it seems to be that way. And this is where, when you start looking at the initial list of creditors, and this is companies or funds who've invested in the company as opposed to who've got tokens. And there's some quite big names in there who clearly haven't done the level of due diligence you might have expected. It is probably the polite way of describing it. So it's a complete mess, really is a train wreck.
No, I think, see, for a common man who wants to invest a couple of $100 buying the tokens, okay, I always tell people that, you know, this is a risky investment. You put an amount which you can afford to lose or which you don't need for the next 3 to 5 years. But in the last 2-3 years, what has happened, a lot of institutions have come into investing in cryptos. Those who were heavily criticizing, you know, the cryptos, like JP Morgan, you know, they were so critical about the cryptos, but they started investing. And now these kind of institutions, they have a team of people doing due diligence, and how come these companies fall for such investments, and they are so-called professionals?
But for the same reason that there have been things like Bernie Madoff from a number of years ago, who was the chairman of one of the securities organizations, securities regulators in New York, had an incredible reputation as being the backbone of the whole thing, and was running the most massive Ponzi scheme ever. And the reason he got away with it is people believed him. And it's the whole, what was it Ronald Reagan said a few years ago, of trust but verify? So this is where we need to go through. So a lot of the conversation in the crypto world at the moment is around having what's known as proof of reserves, which is where companies like exchanges would actually record on a blockchain what assets they actually have. So the reason that FTX seemed to fall out eventually was because they claimed that they had, I think it was $7 billion worth of liabilities, but $12 billion worth of assets. So you go, okay, you got $12 billion of assets, $7 billion liability, that's fine. But nobody had visibility as to what those assets were. And that's where it turned out that I think 7 billion of the assets were the FTT token, which they printed. So it's like them printing their own money and saying this is an asset and it's secure. As soon as that was realized, that meant that they had liabilities of 7 billion and assets of 5 billion, which means that they are insolvent. So straight away. And this is where the auditors should have picked up on that, and clearly they haven't.
No, the bad thing with cryptos is when you show your assets and liabilities, when you show the assets, let's say, the highest price FTD tokens each was around $85. At that price, probably your assets were 12 billion, for example. And then when it comes to come down to $1 in the next few days, it falls steeply.
Yep.
Then definitely those assets will not be able to take care of the liabilities. I was a regular listener to Celsius webinars, which also went bust.
Yep.
And the founder was talking always very highly about their exchange, about offering high returns to their investors, 8 to 12% on fiat currencies, and also easy borrowing systems. Somewhere down the line, I think they went overboard. I am tied up with one or two smaller exchanges which are very, very conservative, and they have announced, through emails to me, I have an account that, look, everything is fine with us. We have never played this kind of a game. We have never overstretched ourselves, and we are safe. Your money is safe, So the thing is that, the reason behind these kind of incidences is sheer greed, and, it's an ego war. Like probably if FTX wanted to fight to get to #1 against Binance, I'm just taking a wild guess, There are so many factors which could be behind it, but when you let loose a horse uncontrolled, there's nobody, you will run wild.
Yep.
And that is exactly what has happened, because it was a free kind of a running for them, nobody watching, nobody questioning them. And what really amazes me is that, unlike happens in the traditional stock market or any other businesses, that they have to submit quarterly results, half-yearly results with balance sheet, P&L and all. It doesn't exist in the crypto world, I think.
Yeah, and that's certainly where everyone's talking about introducing some governance and some transparency and visibility. And this is where I describe it as a plane crash. And like in the aviation analogy, a massive plane crash, loads of people have lost loads of money, including, as you say, the private individuals. That means the regulators will come along, they'll put in place regulation, and it will make things less worse. It'll never make it perfect, but over time it'll keep improving things. I'm conscious we're nearly out of time. I tried to finish these at 8 o'clock. I wanted to quickly ask, Elena or Michael, got any quick questions or anything you'd like to share?
Yes, this would be probably my bias coming from tech. Correct me if I'm wrong, but my plan was, okay, there's some trouble with exchanges, but that's okay, right? Because you can buy off the exchanges and then transfer to some kind of cold storage wallet where it's not connected to the internet and you're much more secure. Am I correct in thinking that?
Yeah, exactly right. Yeah, and this is the whole thing, that part of the problem with FTX, which has caused the problem, FTX is an exchange and people were using it as a bank. What you should do with your crypto is you go onto the exchange, you look at the price of whatever the token is you want to buy or sell or whatever, you do the trade, and then you take your crypto off the exchange. What was happening was that people were doing trades and leaving their funds on the exchange. So now all of a sudden it's acting like a bank. And what FTX were then doing, were I believe from the stories, was that they were then taking the client funds, passing them on to another company to do trading, and then passing the money back. And then when it all went wrong, they didn't have any money to pass back to the customer. So, yeah, folks, hopefully, Michael, that answers it. But yes, you're right. And that comes back to right at the beginning of the conversation where Elena and I were talking, I think, about
I just have a point
keys.
to make to Michael's comment. You
Yeah.
see, here we are not talking about safeguarding your money on cold wallets. Here we are talking about the people you trusted stealing your money. If, for example, you bought FTD tokens at $50 and you kept in a cold storage. Today it is 0.000 something. Okay, so the risk is less about your account being hacked. The bigger risk with these kind of incidents is that the very people you trust, the leading exchanges, they will steal your money.
Yeah.
And what do you do with your money being in the cold storage in such situations?
Yeah.
But
And
of course,
it's-
as a precaution, yes, you must keep it where it is more safe,
But yeah, Michael, absolutely. Keeping it on an offline wallet certainly helps. The problem is Harish.
I don't do
correct-
it. I don't understand how to do it. So I just keep it on the exchanges. I take a risk,
But the thing is that you can make the private keys that you have very secure by putting them onto a hard wallet like this. But if the keys are pointing to something that isn't worth anything, it still isn't worth anything. So
Exactly.
but it is very secure. Anyway, with that, Elena, did you have any last minute anything?
Yeah, a really last minute question. Michael first mentioned STOs in the beginning of the session, and then Harish, you were talking about security tokens, a share that can be bought in a company. A quick definition. What is it, please?
Okay, so a security token is a crypto token that effectively acts like a digital share in a company. So it's called a security token because it behaves like a security, such as a share.
Okay.
That means any company some companies use this as a way of raising funds, just like the way you have in the traditional world, a thing called an IPO.
Yeah.
And an IPO is an initial public offering, which is where a company which is looking to raise money issues a prospectus, so a brochure, to say this is what we're going to do, this is the money we're raising, blah, blah, blah. When crypto started getting kicked off, particularly in 2016, 17, and 18, they created what was called an ICO, which is an initial coin offering, which kind of behaved in a similar way. And then the regulators started getting a little bit upset to say, well, what you're effectively doing is you're issuing digital shares, which means you're launching a security. And that means you should be raising prospectus, doing these things as warnings to investors. You should be regulated, registered, and everything. So that's what an STO is. An STO is in theory, properly regulated token offering with the express intent of using that token to raise funds for the company. So it's called security. That's why there's a court action going on at the moment in the USA with a company called Ripple about a cryptocurrency called XRP.
Yeah.
XRP is part of the Ripple suite. The SEC, which is the Securities Exchange Commission, who look after securities, are saying when they launched XRP, it was a security token offering because they were using it to raise money, but they didn't register that they were doing a securities raise, and therefore they were in breach of all sorts of regulations. Whereas Ripple are claiming, oh, no, it was a different type of token where it was effectively forward paying for some things. It's not security.
I think they are fighting a case in the court now.
That's correct. So
No, I just want to add, regarding the security tokens, the reason why the ICO boom came in 2016-17 is because, to raise an IPO is very, very expensive. It is too much regulated, takes a long time. So the easier way to raise money was the ICO. I invested in 2017 more than 50 ICOs. Most of them gone, don't exist, but luckily I put small amounts, because I personally never want to invest one big amount in one company. I believe in distributing the risk, So ICO was a cheaper way for raising funds when compared to the IPO. And it was again, either the fundraising was based on the project the company announced, but they were never backed by assets like the security token is.
So we're going to have to close off on that. Elena, I hope
Thank
that
you.
gives you enough of a background. It's something I'm happy to pick up and have a conversation further next week on. But thank you, everybody who came along today. It's really great. Harish, if you're in Dubai, I guess that means it's after midnight for you at the moment, time zone wise.
It's just 12 a.m. now.
Yep. So
it's okay.
that's great. So thank you for joining us.
Early for me still.
That's good. Elena, Michael, thank you for coming along. For anyone who's watching
you.
afterwards, I hope you enjoyed it. Cheers.
Thank
and
you.
bye.
Take care. Do
Bye.
you do this weekly, or how do you do?
It's every Sunday at 7 p.m. UK time, and it's
Every
wherever
Sunday?
you-
Because I saw your message on one of the groups, WhatsApp
Okay.
group that I am also part of, you know.
Great. Well, use that same link next week. We
Yes.
use the same link every week, and you're always welcome.
Okay, great. Thank you
Hey,
so much.
folks, have a good one.
Take care. Bye-bye.
Bye
Good
for
night.
now.
Good night.
Bye-bye.
Bye.
Bye-bye.
Hey, so hope everybody enjoyed it. Don't forget, as I was just saying, we do hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time. There is a link down below which gives you details of how to connect that. Hope you enjoyed this. See you again next week.